news out of Mexico. Imagine buying your dream home with zero interest. That's right, zero interest. Mexico's newly elected president is rolling out a game changing housing plan to make homeownership more affordable for everyone. But here's the big question: could something like this actually work in the US? So stick around as we unpack the pros and the cons and what it could mean for your home equity. But before we get into it, I want to hear from you. Should the US consider adopting a zero interest mortgage program like this? What do you think it would do to our economy, housing market, and more importantly, your wallet? Drop a comment down below and let's make this a conversation. And hey, if you're new here, hit the subscribe button to get more insights on real estate and housing trends. So here's the scoop. Mexico's new program plans to build 1 million homes over 6 years, all backed with zero interest, 30-year mortgages. There's no profit for banks, no additional costs from interest, just affordable housing for disadvantaged groups like one-parent families, young people, seniors, and indigenous communities. And it's a massive $30 billion or $30 billion investment. I'm not sure if it's in dollars or not, from the government. Now, this equates to an average price point of $30,000 a home, which I think is pretty interesting from that side, because we do not even have home prices close to that around here. I don't think you can even buy like a modular home for that price. So it's going to be interesting what they plan to build. And this is going to take a little bit of time, and they're going to have to kind of work through all this. So beyond housing, this initiative is expected to create over 15 million jobs. It's a comprehensive plan it's also a huge uplift for both the housing market and the economy, but it's not without its challenges, just like anything. And programs like this have ripple effects, both good and bad. So let's break that down. So let's talk about the pros of lower interest rates, or even having zero interest mortgages with that. Affordability. Lower or zero interest rates mean significantly lower mortgage payments, making homes more accessible for people who couldn't afford them before. And that's kind of like what we have today, where a lot of people wanted to go back to having lower interest rates. The other part is going to be the economic stimulus. Programs like this can boost the economy by creating jobs, not just in construction, but in industries like materials, logistics, and design. We really don't know if all the homes are going to be designed the exact same way. From a cost perspective, it can make sense, but then you have separate problems like how do you grow equity when everyone's home is the exact same part, right? Now, the other part is you have equity for underserved groups. Targeting disadvantaged populations helps bridge the gap for communities that have historically faced barriers to home ownership. Another piece is going to be stability. With more people being able to become homeowners, this allows the housing market to be less volatile, and fewer people are stuck in this cycle of renting, which I think is obviously very positive. And that's what we're always promoting here via housing education, is empower yourself so you can make the right educated decision. But now let's talk about some of the cons of lower interest rates, or even zero interest rate mortgages. So of course, with every silver lining, it has its cloud. Here are some potential downsides. So inflation in home prices. When interest rates drop significantly, demand often skyrockets. And we saw that in 2020, 2021, which can push home value prices even higher, offsetting any affordability gains. And we don't know if they're going to have any type of restrictions on being able to sell these properties and make a profit, which, by the way, that's what's done within the United States. So a lot of times, these programs that you can get into affordable housing, they cap you at how much profit you can make. There's a ton of stipulations around it, but that's why you have to do your research. Now, another piece to the con of this is that it can put a strain on government budgets. So programs like this require enormous financial backing. And if you think about it from the US, this would likely mean higher taxes or reallocating funds from other areas. which they're thinking about doing now, but not necessarily within the housing piece. Another part to this is going to be reduced home equity growth. So 0% interest loans can slow the rate at which homeowners build equity, potentially making homes less valuable as long-term investments. But again, there's a lot of restrictions that typically come with these. Now, the other part is that there's definitely going to be an impact on private lenders. With government-backed loans dominating the market for this, private lenders may lose business, leading to layoffs and less competition. So what does this mean for your home equity? Now let's focus on the home equity piece, a cornerstone of wealth for building for many Americans. And in a system like Mexico's, where loans are going to be interest-free, home equity grows more slowly because you're paying off just the principal without leveraging time value growth. For current homeowners, introducing zero interest mortgages could disrupt home equity values. I want you guys to think about it. If demand for zero mortgage loans grows and home prices inflate, those already owning a home might see their equity diminish or stay stagnant compared to a traditional market. Now, on the flip side, it could make owning multiple homes or renting properties less profitable as well, which could be a big win for first-time buyers, but a challenge for investors. Now, let's talk about what this could mean for the US. Can it work? And again, guys, drop a comment below, because again, we're doing videos for the community and for us here as well. So the more we learn, the better educated we are. So here's the million-dollar question. Could something like this work in the US? While it could help millions of Americans afford homes, our financial system and housing market operate differently than Mexico's. Implementing this would require overhauling not just lending practices, but also tax systems, public-private partnerships, and zoning laws. And let's not forget, U.S. homeownership is deeply tied to investment culture. Would Americans be okay with housing becoming less about profit and more about access? So what do you think? Should the U.S. try doing something bold like this, or would the cost outweigh the benefit? Let's get the conversation going in the comments. And hey, remember, if you haven't subscribed to the channel before, please hit the subscribe button, and I'll catch you guys soon.